Alright, hey, how are y'all doing? I'm just going to be doing a brief recap of the stocks that we've been going over since the last video. I'm going to start this off with SPY. This is the ETF based on the S&P 500. If you recall in the last video, I spoke about how we could potentially be breaking these 293 highs, all-time highs within the next couple of weeks or so. I still think that is valid, but we're going to have to see where buyers step in. Now that we've had a drop here over the past couple of days, we've seen sellers step in intraday, and then after hours we've seen the price go back up. So we'll have to see what we do tomorrow on Thursday, with it being the last day of the week, given that Friday is a holiday, and then into the next week to see if we bounce on any of these levels. But we'll go ahead and move it in. Let's go to the hourly chart on SPY. Okay, so this is a 20-day hourly chart. You can see here Wednesday, that was today, we were pretty much just selling all day. Now into after hours we have also been selling off. Tuesday was again the same story, but not as heavy. And then after hours we pulled it back up, and we opened right around this 291 mark, and we pulled it all the way up to 291.43, and that is where we started to sell off today. And ever since then we've been going down. We didn't have but one candlestick here on the hourly chart that was green. And it looks as if we are headed further downward. I would say, if we can zoom this out a little bit, that potentially the 288 mark, with how much we have gone down here after hours, the 288 mark would be somewhere that I'd want to see it open. It'll be right around here, and if we keep going down, again, the 287 level is also in play if we were to continue traveling downward on Thursday. I wouldn't necessarily say that tomorrow we would see it break below this 287 level. Maybe if we would have enough sellers tomorrow morning, we could see it come all the way down and maybe pierce this 287 level. But I think there would be enough buyers right in this area. With it being the last day before a holiday, I don't know if there will be a ton of volume in the markets. But we could see it move all the way down here to the 287 level, and maybe a little bit lower, but that would be what I would consider for tomorrow. But we want to see where these buyers step in. If it's not the 288 level or the 287 level, we want to see how the overall markets are feeling, to see if we can bounce back up and maybe test those all-time highs. But as we get closer to them, we will see resistance like we've seen over these past couple of days. People that are a little bit fearful that we won't break through and that we might sell off, and we might go lower. We might go much lower than the 287 level. But we'll just have to see within the coming days. The big level that we were looking at to see this sharp break off was the 2900 level on the S&P 500. So if we zoom in here, we can see we had highs of 29.23 on the future for the S&P 500, which is /ES. So it's relatively the same chart as SPY, and we sold off in the morning all day, only had one green hourly candlestick, and we came down here late in the day and we pierced the 2900 mark. We came back up and we just could not break above it. We came down here a little bit closer to it, and we had two green candlesticks on the hourly, and after hours we have broken below it, and we just keep traveling downward. So that $2,900 mark is a key level. You can see back here last week we tried to break it a couple of times and failed both. We consolidated and then went back above. So when we do try to retest, if it is in the near future, I do think that there will be some sellers here, and it might be a hard price point to break through, but if the markets are really strong and we just blow through it, I think that might be a good sign for the future price of the S&P 500, but we'll just have to see as that plays out. Anywho, let's move along to gold. So we'll just go ahead and start with /GC. So ever since we broke out of this wedge, we'll move it to the 4-hour chart. Ever since we broke out of this wedge, we have just been selling off. So in the previous videos, we were talking, just about this wedge that we had forming. Ever since, about late January, here we have this wedge that developed, and we bounced off here. We bounced off a couple times here. We came to the top and we sold off. And ever since we broke this trend line, it has just been nothing but downwards. And the price points that I had discussed were $5 increments roughly. I think at the time that I made this last video, we were hovering after hours around the $1,290 price point. And I had mentioned, we could see this 1285 level because there was support right in here. So we could see this 1285, but if we saw that fail, the next point that we would want to look at is the 1280 level right in here, because we have support back here from late January. And if we saw that break, we would probably want to move downward to the 275, which is right at the bottom, these lows back here from January. Overall, I am not 100% sure on where we are going to go from here, where, if we start curling back up, there isn't a whole lot of support, so I'd want to see if I was going to trade gold, thinking that it's going to move up. Within this next day to 2 days of trading, I would want to see it consolidate around this 1275 level. If not, we could be heading much lower. You can see this is pretty much a good solid upward trend in here from mid-December. So we could see it move as low as 1250 before we see any sort of valid support if we do not hold this 1275 mark. And right now, it's pretty sharp selling. If we would have moved a little bit slower to this price, I'd have a little bit more confidence in buying gold here, hoping that it would at least, try to move upward slowly. But right now it's a pretty sharp sell-off, still going downward pretty quickly, so it's not something that I would want to buy in to right now, because I just would not be confident in this trade. Now, you could always do a swing trade, hoping that it would go up with it being so red. But again, that's not something that I would necessarily want to do. I'd want to see it at least show 1 day of consolidation and signs of it moving back upward before making a trade like that. So with that being said, we'll move to JNUG. This is the gold-based ETF. And again, it's the same story. We hit these highs and we've just been selling off. You can see there was a couple of candlesticks here where we started showing signs that we're moving forward, but still not enough. We're still not above this 9-day moving average on the 4-hour chart. We're still below it. We have yet to crack above it in these last, let's say about a week worth of trading. So that just doesn't really show signs to me that we are moving any higher, or that we are going to break through at any time soon. But again, we are nearing some support levels right in here around the $8.50 to $8 or low 8s. So if we could see it hold right in here and start to consolidate and then move higher, this could be a good trade. But at the moment, that's not necessarily something that I want to play. I just want to see what it does in these next couple of days before I would enter a trade. So again, let's just look to see if over these next couple of days we can hold in these low 8s, and if we can and we show signs that we might be curling back up, that would be a good trade to make, maybe up to the $9 price point level, and then reevaluate and go from there. But otherwise, I think that we might still have a little bit of room to go downward, maybe to the $8 price point. On the flip side, let's go over to JDST. So this one has done very well. It is the inverse of gold. You can see we broke through this wedge that we had, and we had a couple support lines in here for when it broke this wedge and it came back down. And it looks as if it back tested this wedge slightly. It was a little bit messy, but it came back down right into this 35 or $36, $37 price point where we had a little bit of a support line drawn. Again, it wasn't a solid support. You can kind of see it was a little bit messy, zigzag back and forth. I think that's why we broke it and then came back above. But again, as we started to consolidate here just for about a day or two, and we started to move back up, we had these moving averages going in our favor. They were starting to curl back upwards. And so that was maybe a good indication, along with the price of gold going down, that we were going to be moving higher. And it looks as if now, we are at this $45 price point, a little above 45, but a little above the $45 price point, and we are starting to see some signs of resistance. So, you could also take this into account when you're trading JNUG, that you might want to buy in for a swing trade because JDST is at a resistance. So if we start to see this, kind of push lower and maybe break that 9-day moving average to the downside, that would be a good sign if you want to trade JNUG and maybe take your profits on JDST if you made a play on this. But we'll just see what it does over this next day and into Monday. My guess would be that we kind of get squeezed here and maybe pop above. But we'll just have to look and see what it is that we're doing. Moving on to Boeing. This is BA. If you recall, we'll stick with the 4-hour chart. I had said that this looked as if it was going to move lower, and it in fact did not. We came in here on Tuesday and we had a good pop, so I was wrong on this one. We had a good pop. We kind of consolidated around here, kind of, sort of, and then we popped above and we broke through that 380 mark, no problem, and then into the after hours and pre-market hours of Wednesday, we moved even higher and got to this 384 level, which if you can look right around here, this 384 to 386, you can see there's some wicks in here. That is a resistance level that I would take into account. So maybe that's what the buyers were seeing here is they wanted to take their profits from some days prior, and they sold out. So we do still have potential to move downward and maybe test these 370 to 365 levels. But we'll just have to see if there's any news that comes out about Boeing, any positive news that could definitely be a catalyst for it that could push it higher, and maybe break back through these 380 levels and then back up to this 384. But I'm still bearish on Boeing. It's not something that I want to play at the moment, just because in my eyes, I don't see it moving upward. I don't see it as the best possible trade that I can make. But I am still watching it because I do think there's money to be made if we come down lower and show signs of some sort of consolidation, and that buyers are stepping in at these levels. So we'll just have to look and see. But that is just my take on Boeing. Moving forward, we will look at NIO. So this one, we'll move it to the hourly just so that we can get a better look at it. So again with this, moving averages, broke through them, broke this wedge, broke downward, broke through these support levels, came to 5, tried to consolidate, were not able to push higher. We broke the $5 price point, came all the way down on Monday to this 480 point, roughly $475. Tuesday, we came all the way down to, we broke the 450 level, and when you get into penny stocks, the 50-cent increments are usually the support or resistance areas, depending on how you're looking at it, and that was the case on NIO. So if on Tuesday you opened a swing at the 450 price point, you would have been sitting pretty this morning, as we had the pre-market hours take this all the way up to, it looks like it was 496. Is that what it was? Yeah, 496. But you can see, as we got close to that $5 price point, we just were met with sellers. So before the market even opened, we were all the way down to 471. So even if you took this at 450 pre-market, you were looking at a 10% gain, but by the time the market opened and all the sellers had stepped in, we were knocking it down to 5%, which is still a really good swing trade if you did get in at 450, and we could potentially move higher. But again, I want to see it consolidate, hold above these lows that we made, and continue to move higher on NIO. And hopefully within the next week or two, we are able to slowly climb and make it back up to this $5 price point. So that's just my take on it. Again, these moving averages, the 50 and the 100-day on the hourly chart, as well as the 4-hour, are both pointed downward. So that's not necessarily something that I would look at and say, there's money to be made here at the moment. That's just not something that makes me super confident. Again, these could be lows that we don't break for months. If we step in here, buyers step in, and we just pull back up, that could be a possibility, but I don't potentially, I don't really see it right at the moment with how many sellers we've had. But there's always news that comes out, so that could be the case that we move higher. But at the moment, I think with these moving averages coming back down, we will retest the 450 range, and along with these all-time lows, and maybe even move lower. Lastly, we will look at UNH. I had spoke about this one as kind of just a wild card play with its earnings coming out. So I spoke on its earnings. We'll move it in. We'll just go to the hourly chart so it's not all these big candles. We can see some more price action. So we had its earnings. I spoke on how it was getting pinched right here in the aftermarket hours. Its earnings was positive. It beat its earnings yet again, but the overall healthcare sector has been on a downward trend for months now. So we opened a solid, I think it was about a 3% gain. Yeah, so we're looking from its highs, we were looking at about a 4% gain overnight, but we gave it all back and ended the day red on Tuesday, all the way down here to the 415, 416 mark. And again, that's just the healthcare sector as a whole is going down. You can look at many stocks in the healthcare sector and see that it's really been red over these past few days. And if you broaden it out to months, you can see that it has been downward, a downward trend. But if you did play earnings, and you had swung it here at 430 and you sold at the market open, you could have made 4%, so that would have been good money to be had, as long as you practice a good trade. If you bought in on Monday and you saw it pop all the way up about 4%, you're like, man, this thing's just going to keep on going. and you held, you would have ended up with a bad swing trade. And again today we dropped another 2%. I think if you look at it from its morning lows, we came all the way down here to 208. You're looking at, let's go this way. We're looking at about a 6% loss. So you just need to be careful and get the overall look at the specific industry if you're going into some of these bigger stocks. So just something to keep an eye out on. But again, right now on UNH, I think that we will continue to push lower until we show signs or some sort of good news that we are going to be moving up with the healthcare sector. But you can see here on the hourly, both of these 50 and the 100-day moving averages are pointed lower significantly. I think as we go into Thursday, we might come lower and maybe even retest these lows. Potentially, we will just have to look and see what that does tomorrow. But thank you guys for watching. I hope that maybe some of this was beneficial. I know sometimes I get a little bit long-winded and I repeat myself a little bit, but I wanted to get this out so that you guys could see it and just get my overall take on what I see and what is going on in these stocks that I'm looking at. So thank you.